Well, welcome everyone. I'm Anna Corwin. I'm the chair. I'm one of the co-chairs this year of the Women's Spirituality Program. And I'm so happy to see you all. I know we have folks from all over. We've got folks from our own department. We've got our graduate students here. We also have alumni. We have staff. We have folks from other parts of CIIS. We have also quite a number of folks who I know are heard about this through admissions through Michelle Domingo. And so maybe we have some prospective students here. I want to really welcome you. I know some of you who are using Michelle's link, you may still have your name as Michelle Domingo, our admissions coordinator. So if you would like to rename yourself, you're welcome to press those three dots. You can hover over your own face and press those three dots and rename yourself as your own name. Um, oh goodness, there's someone here from Botswana. There's people from all over the world. It is wonderful to see all the places that you're coming from. Um, and so I'm co-chair of Women's Spirituality. We offer a master's program and a PhD program. And the reason that we are doing this wonderful event today is that many of our students have over the years been, we are an academic department. And so we train students, of course, to be academics. Everyone is trained to be an academic and gets that kind. And then also in the last number of years, we've had a number of students who are interested in spiritual entrepreneurship. Either they're folks who are coming in with their own businesses, their own work that they're doing, and they want to use the master's or PhD and all that they're learning with us to grow their businesses, further their businesses, create, expand, transform, whatever it is they're doing, or they're starting anew. They do the PhD, they do the master's, and they want to take all that they learned and start something, create something into the world. And because, we're seeing so many of you um, current, past, prospective students, we also have a number of alums who've done amazing things who we have been inspired by. I've been starting this initiative to really build more explicit training in spiritual entrepreneurship into our program offerings. And so this is something we've been doing for a while. My colleague, Dr. Alka Aurora, offers some courses, Women in Money course, a leadership course that already has been doing this. And then this semester, we are introducing this workshop series that is hopefully just the beginning of some curricular development that we are going to be expanding and building even more into our program. So I am so excited that all of you are here to be part of this, to learn from these amazing folks that we have here. I'm going to just name the past workshops and then introduce this workshop. So our first workshop was Building Spirituality into Your Clinical Practice, a workshop for licensed professionals. And Dr. May Casanova, who's a current master's student with us, was our incredible presenter for that. These are available. This is available up on our YouTube channel if you missed it and are interested. Um, the amazing Jessica Nunez Lamar has organized two of these. This one on February 28th, Developing a Solid Foundation for a Thriving Spiritual Business, a workshop for spiritual entrepreneurs, which really dug into psychological, the kind of what do you have to overcome to prepare yourself to set the groundwork to start a spiritual business. And today we get into some more nitty gritty. Jessica organized for us a number of speakers on our topic for today, establishing marketing and business tools for a thriving spiritual business, a workshop for spiritual entrepreneurs. So welcome to this today. And just a word about Jessica. Jessica is absolutely incredible. We are so lucky to have her organizing this, to have her as a student in our program, to have her as a collaborator. She works as an engineer, has had an entire career as an engineer. She also has her own spiritual entrepreneurship business, and we will benefit from some of these amazing connections she has with folks who she has brought in today. Um, I am so incredibly grateful for Jessica to partnering with me for doing all this incredible work. Um, And before I turn it over to Jessica, who's going to really run the show for us today, I'll say just a couple of things. One is the amazing V, who is our program coordinator. Yes, thank you, V, with hands up there. Put in the YouTube channel. So if you missed some of those workshops, you can go back to that. At the end of this, we will have a survey for you, a really short survey that V will put into the chat, and also you will get it in your email. But we're really asking for feedback because this was experimental. These 3 workshops that we offered this semester, this was an offering we wanted to put out there. And then we also would like feedback to learn as we are building this curriculum, building out offerings for our students and beyond. We want to know, what do you want? What is helpful for you? What are you learning? What do you want to learn more about? So please, I just want to say I'm grateful for all of you for filling out that information. And then finally, for those of you who are prospective students, if you're interested in the program, you're welcome to reach out to me if you want to learn more. I know Michelle, you're very well held with Michelle in the admissions office, but also if you have any questions for me as chair, I'll put my email in the chat and you're always welcome to reach out to me. So without further ado, I will turn it over to Jessica. Thank you so much, Jessica, for being our host and coordinator today.
Yes, absolutely. Thank you, Dr. Corwin. Appreciate it. I'm so excited to see all these beautiful faces. I'm back again. I'm just going to take a couple minutes here to introduce us and then get started with Rebecca. But before we do that, let's just take a moment to ground. Let's take a moment to be here in this space. And so if it feels comfortable to you to close your eyes, beautiful, or maybe just gaze down. And we're just taking this time to come into this space, this place, and this time together. And to gather the wisdom and the knowledge and the insights from the speakers, but also from your intuitive knowing. So just take 3 deep breaths together and I'll guide us. So we're going to inhale and exhale. And inhale. And exhale. And one more time together. Inhale. And exhale. And as we've come together today, come into your heart, drop a little bit lower into your heart. Bring your energy and attention down into your being. And set your intention for today. Today, we are growing and expanding our knowledge and our wisdom in business and marketing and in finance. What do you want to bring forth? What do you want to receive from today? And when you're ready, you can open your eyes. So today is a workshop for spiritual entrepreneurs. And our goal is to establish the marketing and business tools for a thriving spirituality. So let's move to Stevie. Stevie, thank you so much. So Stevie Jones is a virtual CFO. She's a best-selling author and business finance coach for female entrepreneurs. And Stevie provides educational content and guidance on managing business finances. She has helped hundreds of women increase revenue, cut expenses, and take home more cash. Stevie is a former accountant specializing for a billion-dollar international public company who stepped away from the corporate world after 10 years and found a passion for uplifting and supporting female business owners as they navigate the incredibly confusing world of business finance. Stevie frequently speaks to female entrepreneur groups and has guested on a number of podcasts. Her goal is to empower female business owners to be financially literate and feel confident in their financial progress. She's been seen in Authority Magazine and Yahoo Finance, to name a few. So, Stevie, thank you so much. Thank you for your patience. Thank you for joining. We're so excited to have you here. And I will let you get started.
Thank
also,
you.
I will pin you. Spotlight for everyone. All right, there we go. Thank you. And thank you.
And I know that finances are not exactly the most exciting thing. So I promise to be as quick as I can be on this stuff, and we're just going to hit the high notes. I basically just want you guys to make sure you know the basics. We're not going to drill down into, taxes and all of that kind of stuff. I'm just going to hit really high level things. If you have questions as we go, feel free to drop them in the chat, and then I'll stop throughout and answer your questions. And also, please forgive me. I am not a graphic designer by any stretch, and so I work with numbers. So my presentation isn't the prettiest, but it gets to the point. So let's just start with what we're going to cover, and I don't expect this to go 50 minutes. So again, we're just going to get straight to it. I want to cover the one thing that every business owner should be monitoring on a regular basis, which is a profit and loss statement. And you guys have probably heard of profit and loss statements. Some of you have seen them before. And by the way, I'm also going to make this file available to Jessica to send out. So please don't worry about taking super detailed notes. But I want to make sure you guys understand what that is and why it matters that you see it and how to get it. The best strategies for cash management, this is the number one thing that will tank your business, is poor cash management. I've unfortunately seen it happen a few times. And so we're going to go over some common pitfalls that I want you guys to avoid so that you can offer your gifts to people and make money while you do it, because good people do great things with money. And then high level, we will talk about taxes and write-offs, and this will be specific to the US. But I do think some of you that are not located in the US, it was probably similar to how things work in your country. But just know that. Okay, this is as high level as it gets, but we're going to talk about a profit and loss statement. And this is essentially a way for you to look at the finances of your business and say, how much revenue have I brought in? How much money have I spent in order to generate that revenue? And what do I have left over? And that's called my profit. And I wanted to just highlight here some other terms that are used for these words, because it can get confusing. There's a lot of lingo out there. Things are used words are used that all mean the same thing. So if you hear the word revenue, that's also referred to as income, especially if you're talking with a tax accountant or a bookkeeper. We are trained to say income. And so sometimes we'll say income, we mean revenue. Expenses here, when people talk about write-offs, this is what they're talking about. They are talking about all the expenses that hit your profit and loss statement that decrease the amount that's left over. And the amount that's left over is what you're taxed on. So this is your profit. It's also referred to as net profit or net income. So if someone is talking about write-offs, they are talking about this 50,000 right here. And we will talk more about what is considered to be a quote unquote write-off. But this is very high level. I want you guys to be able to see this for your business at any point in time, because there's no way really for you to know if you're running a profitable business without seeing this. I mean, yes, you can say, do I have cash in the bank? Okay, I do, but there are some more considerations there. Now, this is a very condensed version. If you have a bookkeeping system in place, you can break out the expenses and list them out. Maybe it's subscriptions, maybe it's contract labor, wages, etc., rent, office supplies. Same with revenue. If you wanted to break out your revenue, let's say you're selling a course, you could break it out into, okay, maybe your total revenue is 100 grand. Maybe course sales are 20. Service income is the remainder. So there are ways to break it down. A profit and loss statement is not going to look exactly like this, but this is high level what it will look like. Now, bookkeeping, I just want to make sure you guys are all clear on what exactly that means. It's basically a way to capture all of the income and all of the expenses that run through your business. The easiest way to do this, by far, you have a business bank account that is dedicated specifically to your business. Do not, please do not mingle personal funds and business funds, because this will make it extremely difficult on you to see if the business is profitable or not, but it'll make it even more difficult on your tax expert when they need to see financial statements for your business in order to tell you, hey, you owe taxes or you don't owe taxes. So the single best way, have one business bank account. You can have more than one business bank account, but just have your business stuff separate from your personal stuff. And the way that bookkeeping works is once you have that account set up, you just connect it to a bookkeeping software such as QuickBooks. That's the one I use with all of my clients. And they talk to each other. So anytime you have money coming into that bank account, it flows into QuickBooks. And anytime you have money going out of that bank account, it flows into QuickBooks. And it sits in like a waiting room. And then either you, if you choose to do your own bookkeeping, or your bookkeeper go in and they look at what's sitting in the waiting room, and then they tell QuickBooks, oh, this is revenue. This is this type of expense. And that enables you to then run a report from QuickBooks that gives you that profit and loss statement. And that profit and loss statement serves two purposes. It's not just for your tax expert, although they will 100%, no doubt about it, ask you for that at the end of the year. It keeps you informed of the health of your business because you are the investor of your business. You are the main investor. And so we want you to be able to run that profit and loss statement so that you know, oh, wow, my expenses were extra high last month. What happened? Or, maybe I can cut these expenses, or, hey, I'm profiting. I'm going to have to owe taxes, which we'll get to in a minute. Okay, before I just want to click the chat and make sure there's no questions. Yes, I will definitely give examples of some expenses as we go on. Okay, best strategies for cash management. Again, this is, if you guys take anything away from this, please take this part away. So rule number one, when you are profiting in your business, remember over here to the right, this is your profit and loss. If you have a profit, if you are bringing in more than you are spending, you will owe taxes at the end of the year. You will owe taxes. And so we want to make sure that as you are earning that profit, you are setting aside money to cover those taxes. Now, I'm specifically more so talking about the first year of business here, because after the first year of business in the US, if you profit and you're required to pay taxes, the IRS then says, hey, we're not going to let you wait until the end of the year next year. You need to pay quarterly next year. So just keep that in the back of your head. But if this is your first year of business, you need to be setting aside money quarterly yourself to cover those taxes. And you may think, okay, well, how much money do I need to be saving on taxes? Well, this is why you need to be able to look at your profit and loss statement. And in order to look at your profit and loss statement, you need a bookkeeping system to capture all your transactions. So let's say it's you've already finished March of 2025. The bookkeeping's done for March of 2025. You can go into your accounting software, your bookkeeping software, or have your bookkeeper or your virtual CFO send this to you. Send you this profit and loss statement, and you look at this number right here. This in this example, it's 50,000. You would say, okay, I need to be setting aside about 25 to 30% of this amount to pay my taxes. Now, if the next quarter you have a $50,000 loss, then you can say, okay, I'm break even on the year. So I don't need to necessarily have any taxes saved, because if I'm not profiting, I'm not going to owe taxes. But you got to monitor that profit as you go. So after month 3 of the year, check your profit. After month 6, check your profit. After September, and you're always going to look at it on a year-to-date basis, because that's how you're taxed. But what I tell my clients to do is basically take those funds that you're saving for taxes, set them aside into a personal high yield savings account. It's very easy to open a personal high yield savings account if you don't already have one. A lot of financial institutions offer them. I have mine through Amex just because it was easy. I have an Amex credit card, and so I was just able to open an account. It took me like 10 minutes to open a high yield savings account. And the reason you do this is just so it can earn a little bit of interest. A high yield savings account will earn about 4 to 5% interest on whatever money is sitting there. If it's sitting in your business checking account, it's not going to earn any interest. So it's like, why not earn a little bit of money on your savings? Okay, this next part, debt. Let's talk about debt for a minute, because I would say next to not saving for taxes throughout the year and being surprised with like a huge tax bill that you can't pay, having too much debt in the business is the second problem I see most commonly. And I want to say that a small amount of debt is okay and expected for a business because you're growing. It's a sign of growth, actually. However, before you take out any kind of loan, make sure you know what that monthly payment will be, and make sure you're still able to cover that monthly payment, your owner's pay, and the taxes that you're setting aside, and the money that you need to set aside for a rainy day. Because I know this sounds like a lot, but not only do you need to be setting aside money for taxes, but what if you are a service-based provider and you lose a couple of clients one month? Your revenue tends to go like this when you're in business, and you want to be able to cover your monthly expenses even if that revenue tanks for a couple of months. So as you're profiting, you're saving for both taxes and you're saving some cash to set aside for a rainy day. Now, you can again set these same funds into that same high yield savings account, or you can leave it in the business checking account. Maybe you have 2 business checking accounts and you put it in that one just to keep it a little bit separate. The only reason I say my rule across the board is not to put your rainy day fund in a high yield savings is because you might need to tap it pretty often. So you may have a lot of in and outs and in and outs and in and outs. And sometimes savings accounts won't let you do that. You have a limit on how many transactions you can have in like a month or something. But because this is money where it's not that you want to have 2 or 3 months worth of expenses, business expenses, and set them aside and never touch it. You're going to touch this money. You're going to need this money when it comes time to, buying things for the business. Maybe you need a new computer. You didn't realize your computer just broke down and you need to spend a lot of money. Things like that. How much money do we need to make in order to live? That's a crazy amount of money to have to set aside plus savings. There doesn't seem to be any money for living. I hear you. I do. And what I mean by rainy day is just, what if you have a bad revenue couple of months? Revenue, we want it to be consistent. We'd love to say, okay, we are always making 15 grand a month or something like that. But like for me, I'm a CFO. What if a couple of my clients leave in 1 month and there goes, 2-3 grand out the door? Can I still cover my debt obligations, pay to myself? Am I still setting money aside for taxes? And back to how much do we need to in order to live? I mean, clearly you can have varying answers to that, but just keep in mind that you're only paying taxes if you profit, if that helps at all. So if the business isn't making any money, then you're not going to be required to pay any taxes on it. So the idea here is that your business is going to generate a profit. You're going to bring in more money than you spend. And then unfortunately, Uncle Sam just wants his share. And so does the state, by the way. Can I avoid paying taxes by giving myself a higher salary? In some cases, let's cover that when we get to the taxes section. That's a great question. And I'm going to give you guys a broad rule that I'm going to tell you to make a note because I didn't include it in this slide, but we do have a taxes section and I am going to cover that. But again, I just don't want you guys to, there's this guy, I can't remember his name. He's made millions of dollars selling this cash management strategy, and it's escaping my brain at the time. But his whole thing is like, you can't just look at your bank account and see, oh, I have cash. Yes, I can spend money. Like, you can't do that. You have to make other considerations. You have to say, yes, I have cash in the bank right now in my business, but I know next month's expenses are $5,000. I'm going to take an owner's distribution of $5,000. I have a debt payment due of $2,000. And have I profited? Yes. Okay. I've got to set aside my taxes. You're not always going to be able every single month to set aside money for your rainy day fund or for the future if revenue goes down. The times that you set aside money for that are when you have like super high revenue months, maybe out of the ordinary super high revenue months. Just make yourself a goal to just set aside as much as you can. Don't put too much pressure on yourself, especially the first year, I guess, to try to meet that goal of having 3 months worth of monthly expenses set aside, because that really is difficult. So just make a goal of like, hey, by the end of year 2, I want to be really on my way to having 2 months worth of expenses set aside into my fund.
And Stevie, there was a question that's for business expenses, not personal, right?
Correct. Yes, correct.
Hopefully that answered your question.
Sorry, I'm trying to keep up, but thank you, Jessica. Okay. The other common fitballs, are we capturing a stroke? Other common pitfalls, overspending. I mean, it really is just, spending is fun. I love to spend money. I don't know people that don't love to spend money. It gives you that dopamine hit. Like you think, you find a business coach you really want to work with. You're like, this is 100% worth it. Like I'm going to spend the money. I would just say before you make any big purchases into professional development or anything like that, just take a look at your bank account. Make sure that before you're making this large investment, you still can afford to set aside money for save. Maybe this is what you could potentially use a rainy day fund for this. Just be sure to try to like build it back up after you spend it all on one thing, if that's how that works. Or if that's how you want to spend it, excuse me. But before you make large spending decisions, just make sure, am I still going to be able to pay my taxes? Am I still going to be able to pay myself from the business? What I see most often is people avoiding paying themselves and instead investing in these large expenses. Now, if your personal situation allows for that and you're saying, okay, I do have a personal nest egg and I believe in this business and I want to invest in it, that's okay. Especially in the first year, you're going to have to invest money into the business before it makes money. But I would say, look at your personal finances and determine how much am I willing to invest into the business in order to get it off the ground, in order to get it to where it's making money, and set that as a hard boundary for yourself so you don't get out of hand. That is true. Saving and conscious buying is an act of self-love. That is a really, really great point. That's a really great point. Taking out too much debt, we kind of hit on this. Most businesses have a business credit card. I do. All of my clients do. You can do Amex. You can, all the typical credit cards. They all are about the same. If you're going to ask like which one's the best, honestly, they're all about the same. Some offer more points than others for certain things. So you kind of just do a perusing, check your top 3 credit card providers and see which one appeals to you most. But if you're going to use a credit card, which is perfectly fine, you want to try to, just like you do in your personal life, you want to try to make sure you're able to pay it off every single month. You want to avoid building up that credit card debt to the point to where you can't pay off the full balance each month. And the reason is because those interest rates get so high. Those credit card interest rates are like 20% or more. And to that point, if you do get to a point, let's say you have $30,000 in debt and you're just like, well, I can't come out of pocket $30,000 and pay the full balance off. It's just racked up over time. It got ahead of me. That's when I would encourage you to start looking for other options. The best option for debt in your business is going to be a line of credit. And this would be from your bank. Like, so whether you personally bank with them or whether the business banks with them, you will likely have to personally co-sign on the loan, especially if you're a newer business. But if you can get a line of credit, this is also called an LOC, borrow 30 grand off of that and then completely pay down the credit card debt, because you're going to get a lot lower of an interest rate on the line of credit. But before you do that, the one thing I want you to make sure of is that you know exactly what that monthly payment is going to be on that debt, because you may be at a point from a cash perspective where you're like, yes, economically, it makes sense for me to refinance this credit card debt, but I just can't come out of pocket the amount that it's going to take to have an interest rate with a lower, or excuse me, a loan with a lower interest rate. I need to keep paying little bits on this credit card for a little while before I get there. But the best way, just try to avoid racking up that credit card debt in the beginning. And then, of course, the last pitfall, failing to save for taxes throughout the year. I mean, guys, I can't emphasize enough how much these taxes will sneak up on you if your business is profiting. If you have and let's say this is what happens. This is exactly what happens. You're building a business. You accidentally take on too much debt in the beginning because you're overspending. Okay. Then the business starts profiting and you're making money and you're making money and you're making money. But then all of that money that you're making is going to pay down the debt that you've racked up. And you can't afford to save money for taxes. But guess what? On your profit and loss statement, it's going to show that you have a profit. You can only deduct the interest that you pay on a loan. So let's say that you have a loan or a credit card and you're paying $1,000 each month against that credit card. And a portion of it is interest. So like $220 of it is interest. The rest of it goes against principal. You can only take a write-off for that $22. That's the only part that decreases your profit. So on your profit and loss statement, your revenue minus your expenses, just know that principal payoff of the loan is not an expense. So it doesn't decrease your profit. So you've got all this debt that's built up and you're technically, from a tax perspective, profiting in your business. So they want 20 to 30% of this profit, but you need to take the whole profit and pay off your debt. So that's what I'm telling you. Just please keep an eye on your debt and save for taxes. The cost of that. What about the cost of items that you have in inventory? Isn't there a write-off for that? Yes, that is a write-off. So inventory, if you're selling products, when you purchase that inventory, that is an expense. And we're about to get into a little bit more of like what you can book as an expense / write-off. Here we go. High level taxes and write-offs. Keep in mind, those of you that do not live in the US, this is US specific. Can I have a calendar of 10 events? A calendar of 10 events and that be my inventory? I don't know that I quite follow.
Michelle, you mean like a service-based as opposed to product-based?
Exactly. If I'm offering counseling or something and I only have 10 appointments, does that count as an inventory? And therefore, can I have a lot?
No, unfortunately, no. I mean, the things that you would consider there would be, okay, what is it costing you to provide that service? So, are you working from a home office? There's a home office write-off for that, which I'm going to go through here. Are you using your cell phone in business? You can write off a percentage of that. So let's get to the write-offs and I'll go through them and then we'll talk more about how you could potentially take advantage as a service provider of expenses. But just off the top, never spend money in your business only for the sake of getting a write-off. It almost never makes sense. It only ever makes sense if like you have a super connected tax expert and they're like, yeah, you need to spend, $500 more and it'll lower you down to a tax bracket or something. Like it almost never makes sense to spend just for the sake of getting a write-off. And again, write-offs are business expenses that decrease your profit. If you think back to that profit and loss statement, they're that second negative number, and you are taxed on your profit. So they're saying, hey, if you're running a business and you're making money, we want our portion. Now, we're going to talk about some common write-offs or some common things that you can pay for from your business and some things that your tax accountant can add to your tax return as an expense, even if it's not something you're paying for. Okay, so for example, which you're kind of paying for it, but let's talk about rent. Now, you may be renting an office space. If so, that is super upfront. You've got cash coming from your business checking account, going to your landlord. I'm not talking about your personal residence right now. I'm talking about if you're renting a storefront or you're renting a place specifically for business, you're not living there. All of that is a write-off in your business. Now, if you're working from home and you have a home office, they do allow for you to have a write-off for that, but you're not like, money's not exchanging hands between you and your business in that scenario. This is just like maybe you're paying a mortgage or you're renting a space, so you're paying a landlord for your personal space. But what happens there is at the end of the year, when it's time to file your tax return, your tax advisor, it's good for you to hear this because tax advisors are not perfect, but your tax advisor should say, hey, are you working from home? If your answer is yes, then they should be able to calculate a certain amount based on the square footage of your home office that you're allowed to book as an expense on your taxes to decrease your profit. Office supplies. So this can be everything from the actual office supplies like pens and pencils and journals and notebooks to computers, printers. None of us really use fax machines anymore. I'm trying to think so like, for example, I have a tripod because I create content. So this is an office expense. This tripod is an office expense, an office supply. If you have a ring light, if you have a webcam, if you have a bookshelf in your office, if you have plants that you want to put in your home office, if you're working from home, they have to be in your home office. Office furniture. I'm just trying to think of anything that like paper, anything that maybe you have never considered. Headphones, microphones, office decor, all of that stuff could go to essentially office supplies. Subscriptions. So this would be like, I pay for a Zoom subscription. If I want to use Canva Pro, if I want to use Outlook or G Suite or things like that. The one that people most commonly forget are the ones that are linked to their Apple account, because that just like comes out of our phone. we never know why Apple is charging us like $2.99, $11.99, $13.99. If that is for like an app that you use on your phone for business, that is a business write-off. Let's see. Contract labor. If I want to have a session with Jessica because I think it will help me in my business, then I'm paying her. And you could book that as number one, contract labor. You could also book it as professional development. I'll come back to these questions in just 1 second. So you can book, so yes, so contract labor is really mainly like if you're paying someone to help you with social media. That's probably the most common contract labor that I see. If you're paying for a virtual assistant and they're not going to be your actual employee, but they're doing their own thing, they have their own business, and they're sending you invoices, then that's contract labor. That's an expense through your business. Wages to employees and payroll tax. So this is if you decide you do want to bring on an employee and not a contractor. And this reminds me of the question that was asked earlier. It's a complicated question. I'm going to do my very, very best to try to explain it. You said, I think the question was, if I pay myself more, can I take a bigger deduction for that? So when you first form a business, you're almost always, from a tax perspective, considered a sole proprietorship. And you may say, well, I have an LLC. That's great. You need an LLC for legal purposes, but having an LLC does not affect how you're taxed whatsoever. So when you have an LLC in place and you're the only owner of the business, you are considered a sole proprietor unless you specifically elect to form as an S corporation from the get-go, which very few businesses do. Now, when you are a sole proprietor, the way that you pay yourself from the business is you just take cash out of your business account and like send it to your personal account. And it is called an owner's distribution. And it is not a write-off. It is not an expense. Okay. Now, and that makes sense. And I could go into why that makes sense, but it would take us another 45 minutes to try to explain it because it's a lot of tax stuff that you guys don't need to worry about. Just worry about this next part. If your business starts to profit 50,000 or more per year, and this is not on the slide, so this is what you'll want to take a note of. If your business, and you're looking at your profit and loss statement, your business starts to profit 50,000 or more per year, ask your tax expert, should I elect to be taxed as an S corporation instead of a sole proprietor? And if your profit is high enough, there is a tax advantage for you to then become an actual employee of your business, take a paycheck that has payroll taxes taken out of it, and you have to do the whole payroll tax thing. The reason you don't do this from the beginning is because it only makes sense if you hit a certain profit level or higher. There's a lot of math that goes into it. And that's really my answer to that question. And then being a sole proprietor, how much do you pay yourself? So really you just have to say, how much is it? Look at your personal budget and say, you know, how much do I need to be paying myself in order to have a little bit of personal savings and set aside for retirement. I don't want you guys to forget about retirement. I really want you to take care of yourself from that perspective. And you can get some deductions on certain types of retirement accounts. That's not exactly my expertise level, so I don't want to give advice on that. But the good thing about being a sole proprietor, I guess I say the good thing, the easy thing about it is I know that if I want $5,000 from the business, I'm getting to the dollar, I'm going to transfer $5,000 and it's going to hit my personal account. If I'm an S Corp and I'm an employee, then it's just like being an employee of another business. Let's say they say they're going to pay you $5,000 per month or whatever. That's not what hits your bank account. What hits your bank account is after they've got FICA taken out, after they've got Social Security and, you know, retirement savings if you elect it through there and all this, and payroll taxes. And so I like being a sole proprietor from that sense. Now, when you are an S corporation, if you get to that point, you can get paid two different ways. You can get paid by wage, like through wages as an employee, and then you can still take additional distributions out of the business as you need them, but your distributions need to be lower than your salary. It's a whole thing. Okay, so a couple of other write-offs that people forget about, their cell phone bill, because a lot of times we have a cell phone before we have a business. So we're paying our cell phone bill from our personal accounts. Well, if you've got your business account, it's only going to pick up, and you're using a bookkeeping system, it's only going to pick up the expenses that are running through that account. So it's not going to show up in your profit and loss statement. You could, you know, switch the billing on your cell phone to your business account, or at the end of the year, this is, again, something your tax expert should prompt you and ask you, but they should say, are you using your cell phone for business? Yes. Okay, what percentage of the time would you say you're using your cell phone for business? 50, 60, 70? Okay, take that percentage of all of your cell phone bills for the year. We're going to add it to your tax return as a write-off, as an expense to decrease your taxable profit. Same thing with your internet. If you're paying internet from your personal account, they'll do that exact same thing. Hey, I'm using the internet for my business and I use it probably 70% of the time. You can write off 70% of your internet bill. Mileage driven for business purposes. If you are driving to have lunch or a meal with a client or someone you're networking with, you're driving to the post office, if you're driving to the store, any of that stuff, you can take, it's we'll just call it roughly 50 to 60 cents per mile as a deduction for mileage, for business, for miles driven for business purposes. Business travel. So if you're going to an event for business, pay for your travel, pay for the food that you eat when you travel, your hotel stay, your Ubers, everything like that. Those are all write-offs. And then business meals. This is including the meals when you travel. But let's say that two of you live in the same city, you go grab lunch together because you want to talk about your businesses and get ideas from each other and network. That is a write-off, but you only get to write off 50% of that. That's just a standard rule that they've had for a long time. Okay. So again, are we just logging all of this in a spreadsheet, or are we keeping receipts, or what? So this is where your QuickBooks or your accounting software comes into play. Because all of this stuff should be cash, with the exception of the few things that I mentioned your CPA will ask you about. All of the stuff that is you're paying cash out for will hit your business bank account. When it hits your business bank account, it funnels into your accounting software such as QuickBooks. Once it's in there, someone will log it as, this was a meal. We went to, I don't know, Ocean's 11 as a restaurant and we paid $50 for a meal, and you book it as meals. And yes, Jessica dropped a QuickBooks link into, if I had a discount code to offer you guys, I would give it to you, but unfortunately I do not. But QuickBooks is by far the best that I've seen. And you can start with like, well, I don't want to say that anymore. You can start with the lowest plan, like the cheapest plan. And you can start there. And if you realize that there are some other functions you want to use that's not incorporated into that plan, you can always upgrade. For instance, you can invoice your clients from QuickBooks on a recurring basis. You can have them automatically sent out. You can track who's paid, who hasn't paid. There are a lot of things that go along with that. Let's see. So now I'm happy to take on any other questions that anyone may have. I know we're like 2 minutes over, so.
No, you're good, Stevie. We have time. We have till 1. We just need to send out the feedback form. So real quick, Midiana asked, being a sole proprietor, how much do I pay myself? And then the follow on, will I pay twice for income tax? One for my business and then for my salary?
No, so the sole proprietor, that's the one where I was saying, just look at your personal situation and say, how much money do I need to have coming in to pay my personal bills, but also be able to set aside for retirement and set aside for some personal savings. And then that's what you say, okay, that's what I have to pay myself from the business, period. Like start with that number. How much do I need to be able to cover my bills, contribute to a retirement account? Maybe you don't want to do that first year of business. Maybe you're like, you know what, until this thing gets up and running, I'm not going to worry about setting, my 401k. I'm just going to not touch it for a little while, or I'm not going to contribute to it. Allow yourself a couple of years. That's okay. That's okay. It's hard to be super profitable right off the ground. So please don't think that that's normal for someone to start a business and immediately start profiting like crazy. It's not. So I would say, calculate the amount of money you have to have in order to pay your personal expenses, and then make that a boundary and say, I always have to be able to take, maybe that's $5,000 per month. I always have to be able to take $5,000 out of my business. So I know if I profit $6,000, $5,000 of it is coming back to me. And so, you just kind of have to start with that number. Paying taxes twice. No, you will not. So basically the way that it works is, this question would be if you are an S Corp and if you are an employee in your own business. So when that happens, you get a deduction. Deduction is another word I should have put on there that's the same as write-off. People will say deduction and it means write-off. It means expense. You get to take your salary as an expense when you're an S corporation. If you are a sole proprietor and you're not running your pay through a payroll system, you're just moving cash from your business account to your personal account. That is called a distribution. It's called an owner's distribution, and that is not treated as an expense. As a sole proprietor, how do I register the business? How do I make my business official? Okay, that's a great question. There are a couple of things to do from a legal perspective. You need to make sure you file an LLC, but before that, it's usually registering with your state. So whatever state you're operating out of, you need to go to like, I'm trying to remember what website it is for each state. Maybe it's like the Secretary of State website or the business licenses website. You need to get a business license for your state. And then usually there's information there on what other steps you need to take. But you start usually by registering with your state, and then you move to form an LLC, which that's typically done. You can do it in the very, very beginning, or you can do it a little while down the road, but that is for legal purposes. It's not a requirement from anyone. It's just a really, really good idea. If I make $5,000 and I pay myself $3,000, do I pay income tax for $5,000 for my business and then personal income tax for $3,000? No, because if you think about it that way, this is again assuming you're an S corp and that $3,000 is salary. It's going to decrease your profit that you pay tax on. So if you make $5,000 and you pay and you're an employee and you're an S corp, you pay yourself $3,000. Yes, you are paying taxes on that $3,000 as income if you're an employee and if it's a wage. But then you're not going to pay taxes, business income tax on the full $5,000. You're going to pay business income tax on $5,000 minus the $3,000 you've already paid taxes on. So you only pay it on the remainder. Oh, stop sharing my slides. Okay, I can do that. Let's see if I can figure out how to do that. Oh, on Zoom, duh, Stevie. Okay. That's trying to get to my Zoom screen. 1 second. There we go. Sorry. Now, if you are, I'm trying to think if there's anything else that I haven't told you guys. This is a lot of information. A lot of information that I've just been like going super fast to try to get it out. So listen, I do not expect any of you to walk away from this understanding everything that I said completely. Again, I'm going to make sure you guys have this file so that Jessica can send it to you. But if you can find yourself a really good tax expert, they can also walk you through all of this. And it might be like, well, yes, they're expensive, but sometimes they're worth it. They really are. To get it right from the very beginning and just make sure that you start off on the right foot, it's worth it.
Thank you so much, Stevie. I agree. This is dense, but it's so necessary to understand the tax side and the business side of our businesses. And by any means, I don't want this to deter anybody from making a business. It's meant to excite, not necessarily excite, but educate, right?
Yeah.